All right, welcome back. I'm going to say that to the DatacenterHawk podcast because it's been a hot minute.
Here we
since
are.
We've been in the chair. You have quite literally traveled around the world since the last time we talked.
That's right.
We're not going to talk about that today. We're going to talk about domestic issues.
Okay.
U.S. North America data center market today. So, hey, welcome. I'm Mike Netzer, joined as always by my good friend. I think it's worth mentioning that we are actually friends. We actually enjoy one another's company.
We are.
It's not just a facade for the
That's
podcast.
Right.
DatacenterHawk founder David Liggitt, what is up? Thanks for being in the chair.
In fact, one time we were at a place outside of work, and we were talking or something. Someone came up and said, "Y'all really hang out like outside of work too?" And we're like, "Yeah."
Why wouldn't we?
Great. So yes, I'm doing great, Mike. Thanks.
That's what friends do. They hang out.
That's right. But glad to be back.
Glad to have you back. Okay, so there's been a lot going on in the space, which we want to talk about, specifically around North America, U.S.
Yes.
That is the focus of today's podcast. But before we jump in, I just thought it's worth mentioning that if you are in your organization responsible for data center real estate strategy, that is exactly who we are built to serve around competitive analysis, supply and demand, big end user analysis, power infrastructure, fiber infrastructure. That is what we exist to do, is to help you both inform and accelerate your data center real estate strategy. So if you are not familiar with DatacenterHawk, check out datacenterhawk.com for lots more info on all that it is we do. But today we're going to talk about some of the big things that have happened in the first half of 2025.
Yes.
We are in, specifically in the U.S. So there's a handful of, I think, big trends that you're seeing. I think we'd love to get kind of a download on each of those. So let's start with kind of the big one and it's something we've really probably talked about on this podcast for 3 or 4 years now is, the shifting in the geographical shifts in demand and where it's going.
Yep.
So kind of the headline stat is, we track core markets, secondary markets, even as far as to say maybe tertiary markets. And then there's another group of markets beyond that that have had little to no data center activity demand for, historically. And so what we've seen is a growing amount of demand land kind of outside of those top 3 tiers of markets. So talk about where you're seeing that. What do you think is driving that, kind of the ins and outs of that?
Yeah, the first thing I would say is, just historically, the data center market in the U.S., really centered around bigger cities in 10, 15 years ago. And so those cities typically were, Dallas, Chicago, Phoenix, Northern Virginia, Northern California, like areas that had other businesses around them. I swear, every time we do a podcast, there's like a guy on a motorcycle and he drives back and forth
on a podcast.
It's like our arch nemesis out there somewhere. Anyway,
it's the price you pay for this beautiful view of 635.
Right. If you're listening, I hope you enjoyed that. But basically that's where the space kind of started, and the shift this year. I think if you're like in the kind of this midpoint of the year, I think we have seen these larger projects go to more rural markets, and those have been
nailed it.
Yes, thank you. And those have, and that's been a big shift in the space because we had never seen that before at the size that we're seeing today. I think the one takeaway here, if you're new to our spaces in the second quarter, one trend that we took away was the growth in those markets actually outpaced the growth in the major data center markets. So I think Atlanta, Chicago, Phoenix, Dallas, those markets that I mentioned. Now that's not a trend I don't believe we'll see that moving forward. I mean, I really think, and I think you're seeing this in the way that people are buying land, that most groups believe in the thesis that having sites in closer proximity to these larger markets in the long run is really the thing to do. But we're seeing major investment in areas that have had no data center growth in the past. Probably will do 1 or 2 larger deals, and then that'll probably be it in those specific areas.
Yeah, and I think that speaks to 2 things. One, we've seen large end users buy land, develop for themselves in everywhere.
That's right.
Non-markets, middle of nowhere.
Yep.
That's been happening for several years. Not so much on the leasing side.
Yeah.
And now we're starting to see them leasing in those far-flung markets, which again speaks to, 1, probably some additional demand that can't be met by self-build, and 2, an expansion of that buyer pool.
Yeah, that I would say that's certainly a big part of it. And 2 is like how much development you really need to do before you're speculatively building anything, or so it's a much different view if you have a site in Mississippi or North Dakota, how you would look at like spec development or even like the pre-work you're going to do versus a site in a Dallas or Chicago or Phoenix. So again, on the geography, the shift is continuing to happen in the U.S. and in North America. I think it will, probably continue this year and into the next. But I would just say that watch that demand in those markets, because it's really fascinating to see. If you go buy land in a rural market and are planning on building something, while the group of people that can lease it has grown, it's still a small number. And that's an important thing from an investment perspective to recognize as you're doing that.
Yeah, and if you forecast out to say like 2050, the entire country will be just one big data center.
One big facility.
It will be one market, one
big
monolithic,
facility.
one gigantic facility.
That's right.
Can't wait. Okay, second piece is like, kind of the way demand has started and stopped.
Oh, yeah.
And there's been a lot of announcements. Maybe if you're kind of dialed into the space, you've heard rumors that different companies are ramping up their leasing or they're ramping it way down. And so talk about that, and what do you think is driving that, and what's the impact on the space from that regard?
Yeah. Demand is something we're all paying attention to, and how these companies come in and out of the leasing space is really interesting to watch. One thing I would say it's really important to note is that there's a lot of new people in the data center space, new companies that have come in the last 12 to 18 months. It's a hard space to be in for a couple of years and get the return that you want and then get out of the market. Those have been in it for a while, that are going to be in it for the long term. Don't maybe lose their minds when they hear a group is all of a sudden stopped or turned off or backed out of a deal like an LOI or something like that. So I think there's a couple things I would say here to this at kind of the midpoint of the year. One is the nomenclature around the starts and stops is really important to understand. There's groups that are looking at 20 different sites. It doesn't mean they're leasing 20 different sites. It doesn't mean there's facilities that are going to be built on all of those sites. So I think understanding when somebody says, hey, they backed out of a deal, what really does that mean? Like, the industry needs to be thoughtful in how we communicate that out. Mm-hmm. That's the first thing. Second is, if 2018 to 2020, we had a similar period like this in the space at a much smaller scale, but there were some similar themes. One was that we had a big ramp up in growth, and then it kind of cooled for a bit. And those that remember back then, we called it kind of the digestion period of the cloud growth, and then it ramped up again. And so I think that there's some of this that I just go, hey, there's groups that like take a lot of capacity and they need time to maneuver through some of the shifts that are happening and taking of the space. So that's the second thing that I would say. But the third, during that period, there were about 3 or 4 users that were doing that work. Now that the user list is much larger, we talked about it. So there's so when there starts and stops, the challenge the market faces now, and actually those users face, is that there's other groups coming in. Yeah. And you can tell by the capital spend that the hyperscale companies are talking about publicly, how much they're spending on the space. Some of these AI groups that have come in, the GPU as a service groups that have come in and are doing certain things. You can pull back from space, but different today than back then is those spaces potentially will not be there when you come back to the market. Yeah. And back in 2018 and 2020, those companies, I would believe, always thought that like, hey, I can pause this thing for a year or two and come back and it'll be there. That's not the case in today's data center market. So I think with the starts and stops, the minute we hear one group might be stopping, we hear 2 others are back in the market. And one anecdote I'll share is, there was a group that paused in, I don't know, let's say March or April, for a month or two, literally a month or two, and they come back in June and July, and they're already behind again. Mm-hmm. So that's the pace that these companies are working, and that's not a shot at anybody. It's like they are dealing with trying to scale a business and scale growth at complexities we've never seen in the space before. Yeah, so it's a really challenging thing to do. Yeah.
Again, you can do the math on, to your point, the publicly announced spend.
Yeah.
And just rough translate that to what that equates to in demand.
Sure.
It's massive.
Yeah. I don't know how it can't happen fast, because it's the infrastructure it takes to get that money going or get those sites going and things like that. It's just it's too much. So we're in a very unique time.
Very unique time. We've been saying that for a few years too now, and it persists. The dude abides. All right. Related to that on the scale. And so I think for a number of years, it's been bigger, right? It was 32 megawatts, great, huge deal. 72, bigger, 100,
Yes.
wow.
Yep.
Now 500. We won't talk to anybody unless they've got at least 500 with a path to a gigawatt.
Sure.
I mean, I think we said that verbatim on this podcast probably in the last year. That's started to change.
Yeah.
And there's been I think there is still demand for those large campuses,
Yep.
but there's a new evolving demand for maybe some smaller. So talk about that.
Yeah. I think that the ambition to get capacity in one place, in a market, on one site, et cetera, is the ambition to do that is different than reality. And I think we all would understand that. But the trends that we're seeing around, growth, like the large growth, is really, if you can get to those rural markets, it really needs to be, 500-ish megawatts with additional phases beyond that, for someone to like commit to that rural type growth. And there's probably 5 to 10 companies that will, and right now, maybe a few more. I think one of the things, maybe one good takeaway for people listening would be on the scale side of things is, because of some of the regulatory challenges states and different municipalities have put out in the market, there's some gaming of the system going on. Like, can we stay beneath a certain number and not face the same type of scrutiny we might related to permitting or money we have to put up? And I think that's something to look at on like the lower end. So like in Texas as an example, I think the numbers I'm saying are right. There's like a 75 megawatt number that if you're below that, there's less scrutiny. If you're above that, there's more scrutiny. So, trust me, there will be people that game that system.
If there's one thing people hate, it's scrutiny.
That's right. Or try to game that system all day long. And so that's one thing we're seeing there. But I think even like finding a portfolio or establishing a portfolio of areas that have 200, 300 megawatt sites and that's it isn't necessarily a bad strategy today, because if you can reduce the time, I mean, a lot of the value created there is around the timeline of the delivery of the power, which again is not is a pretty obvious point today, but it's worth saying. So that range, that 200, 300 megawatt range, is still pretty attractive for some of these companies, and I think that as this next round of users matures, they're going to mature from the 36 to 72 megawatt site into the 100, 200, 300 megawatt campus range. Yeah. And so understanding the demand is not just all up at the 1 gigawatt range. There are some companies that are trying to understand that, but there's still this middle of the pack that is, those 200 to 300 megawatt sites would be interesting for them.
Would be interesting to them. And probably worth mentioning that we still believe there is demand for the even smaller the sites in that 20 to 30 megawatt. 100%. That is still a bit of a moving target from both sides, from the buyer and the seller in that regard. So that's probably another topic for another day. You mentioned alternative energy, or just energy, and talking about being a whole nother wrinkle. Once again, probably do a whole podcast on that. But talk at a high level about what you're seeing from, again, alternative energy being something other than a grid-connected site.
Yeah.
What are the different options being entertained? Do you see anything that's become more common or less common?
Yeah. Again, Mike and I will state, and it's obvious, but we're not energy experts. But a year and a half ago, I think I've shared this probably on the podcast before, but I was with somebody that finances energy projects, and I was just asking him about the data center space and the growth that we are seeing and the industry's kind of evolution around energy use. And the person I was speaking to was like, natural gas is the only way that you can accomplish the timeline side of that, in the U.S. with, the growth. And so, and I think that's what we've seen most of the evolution be behind lately. I think there's a number of other energy kind of pathways being talked about, thought through. I think we think about like, can it work? Then there's also the financial component of that. Then there's also the like social responsibility and community pushback. And so there's a number of different things to consider.
There's another aspect which we'll talk about in a second.
Okay,
we'll tease.
I can't wait.
That's a good old podcast tool to tease.
Get ready.
It sounds like what you're saying. There are some other groups like solar or wind or hydrogen, but it sounds like nat gas is still kind of the first option First option would obviously be grid connected.
Yeah.
Second option would be natural gas,
Yeah,
whether that's a permanent or even bridging solution.
Yeah, I've seen it seems to be that way, and I've even talked to some data center operators that are like, hey, we're not, we're going to let people go chase the alternative energy thing. We are going to double down on utility, and we're going to find places where utility can be delivered, and we are going to focus on that. And so I think you can see a bifurcation of some of the groups that are wanting to do that, but it certainly provides. It's one of the reasons we've seen so many new entrants into the space from the energy market. It's because they're really coming at it going like, hey, we know energy really well, and if we can set this up in a way that works for you long-term or in a bridging solution that allows you to get to utility, there's opportunities there. So I think it's really, the natural gas source has really been what we've seen really drive a lot of the interest and growth, but there's other options being talked about too.
Yeah. And one of the things to consider with the natural gas specifically, and you brought this up, I don't know, a couple weeks ago, is the load profile of an AI deployment and the ramping up and down. We've talked about that before. It's different than like a normal cloud or data center load, and that doesn't really play well with a natural gas, on-site generation solution.
Yeah.
So that's, we mentioned that as like there's a design implication, but I think you'd mentioned some other design kind of changes or trends you're seeing kind of emerge. So let's talk about that.
Yeah, the design implications I think kind of stem towards just overall like construction of the building and how many stories and what the actual like physical structure of the space is today. There's groups that are trying to scale up quickly with GPUs and that you've seen, I think Meta's been pretty open about some of the shifts that they've had on the build of their sites. Very different than what we've seen, 3, 5, 10 years ago. I think the co-location the data center operators are still in the challenge of like building something that's going to appeal to, this 10 to 20 and the 10 to 20 end users that are doing things at large scale. So being able to like be thoughtful in the designs related to how the space is together, how the size of the data halls, obviously the density, how water is being introduced into the space through liquid cooling. We've even heard of some groups that have felt like they over-provisioned for liquid cooling and are now thinking about how to, build something that is more in locations that could be cloud. You could have a cloud function too. Network gear traditionally is like air cooled, and so thinking of how to like consistently cool that. There's just the design side of things just really fascinating, and we're not. I feel like everything we're talking about, I'm telling people we're not experts in.
It's a survey course. We don't need to shy away from that.
We're not energy experts. We're not architects.
You're a conduit, which is great.
But I think that like the design piece is really fascinating to watch in our space. And AI has changed such like the norm. The way that we built data center facilities for so long has shifted, by a bunch, and it's going to be fun to watch over the next 3 to 5 years. But that design, those design changes can impact things like how big of a site do you need, and that will impact where it's going to be based on power. So there's just even the design implications have fascinating impacts, beyond just like the size of the building and how much power can go there.
Building data centers is hard. Why would anybody want to do this?
I know.
It's a bunch of masochists. It's really, really hard. And it's getting harder. But no, this is great. Anything else to add? That was a great kind of synopsis kind of at the half year point of the year.
So again, we talked about geography. We talked about scale, design.
Kind of demand starts and stops.
And alternative energy. Those are 5 really good things to kind of build a framework around, and just do check-ins. And so that's why we wanted to provide this. Some of them change dramatically. Some of them don't change that much. But
until they do. You know what I mean? It's
that's
like
right.
Some of these things seem to be a relatively straight line trend, and all of a sudden it's like, oh, left turn.
Yeah. So it's that's part of it. But I think as we continue to, think people probably know this. We digest a bunch of information through a number of different platform or tools, and then we analyze it and put it on our platform. And so these are just some of the findings from that. But if you want to understand the space, I mean, in the U.S., and why we did this in the U.S. is like, this is where the large AI growth is happening right now. Now, it's certainly things are happening in Europe and APAC, and in some ways in Latin America, but it is front and center right now in the U.S. And so this is where to pay attention if you're wanting to be in the game from an AI perspective.
Awesome. Well, great thoughts, David. Thanks again for being on the podcast with me.
Well, thank you for having me.
And MC. Rural. Good one. You nailed it 3 times this podcast. I was very impressed.
I did.
Not a slur or anything about
That's
it.
Right.
That's
right.
Anyways, all right. Hope this was helpful to you, the listener. Anyways, we'll catch you next time.